Welcome to our channel, Finance Experts. Today's topics include Tesla, Cathie Wood, and Elon Musk. Cathie Wood claims that Tesla stock might increase by 1,030% by 2027 in the first part we will be reviewing. It's the best analysis Elon Musk has ever seen, he claims. In the following part, Cathie Wood is reported to have purchased millions of shares of a penny stock, which is a struggling business. She is currently loading up on this business, so we'll talk about the stock's future as well as whether you think it would be a wise investment for you. Finally, we'll discuss 3 other stocks which Cathie Wood is acquiring for her ARK ETFs and that you ought to add to your list of sites as well. Tesla intends to commercially create a fleet of robo-taxis by 2024, and ARK Invest is highly impressed with Tesla's production ability as well as the technological capacity to actually do this. Because of this, Cathie Wood of ARK Invest thinks the price of Tesla shares might skyrocket. Cathie Wood is the CEO and the founder of ARK Invest. Asset management firm ARK Invest specializes in making investments in highly innovative as well as novel technologies used by various businesses. In simple terms, Cathie Wood wants to find extremely creative businesses early on, before they start to turn a profit, so she is able to buy them for a very low price, but in the long run, they are likely to experience a huge increase in their share price. Cathie Wood's early recognition of Tesla, which we all know is a big success story, is what propelled her to celebrity status. Cathie Wood continues to have a lot of faith in Tesla's TSLA shares, with their potential to skyrocket in terms of their whole share price. In fact, according to ARK Invest, who recently issued their comprehensive research and assessment of Tesla, the business may soar to $2,000 per share by 2027, representing a potential increase in the share price of 1,030%. The Tesla shares are currently trading at $180.14, demonstrating Cathie Wood's and ARK Invest and its analysts' conviction that the company still has significant upside potential. Their valuation strategy is based on robo-taxis primarily, since Tesla CEO Elon Musk stated that the company is attempting to deploy a robo-taxi fleet in order to supplant both Uber and Lyft. Elon Musk recently told CNBC in an interview that he's hoping his whole self-driving technology will eventually be included in robo-taxis, and that the greater the number of Tesla vehicles sold and the more the robo-taxis produced, the more money Tesla will generate overall. Keep in mind that Tesla is a corporation that specializes in more than just electric vehicles. They are also experts in energy generation, storage of energy, and soon, robo-taxis. The management at Tesla is still optimistic about their ability to expand their manufacturing capacity, their overall technology, and their ability to enter newer markets. The company's complete self-driving technology will push it even further towards profitability in the foreseeable future, particularly as it improves. Tesla will be able to generate 2 to 3 times the initial worth of sale price of the car through robo-taxis, according to Elon Musk. In fact, Enterprise Car Sales operates on a similar business strategy, renting out cars for 2 to 3 years before selling them and replacing them with newer models. By 2024, they will be able to take advantage of their current benefits, particularly in production as well as technology. Present shareholders, however, are certain that if people invest in the business now, not just will the present valuation match up with their entire market cap, creating fantastic buying chances, but Tesla will ultimately be worth significantly more than it is at the moment. ARK Invest in particular is confident that its autonomous taxi services systems for the robo-taxis will bring in $4 trillion by 2027, as well as $9 trillion by 2030, and hopefully, this will prove true globally as well as in the United States. In light of it, ARK Invest presents 3 potential outcomes. One is overwhelmingly bullish and upbeat. One is overwhelmingly bearish and pessimistic, and one falls somewhere in the middle. Their negative projection for the price of the Tesla stock by 2027 comes in at $1,400 each share, which would nevertheless represent a huge gain for Tesla stockholders. If Cathie Wood's research is accurate, the company will grow by several 100% between now and 2027, resulting in one of the finest purchasing opportunities on the stock market today. According to their middle case or scenario, Tesla shares might be around $2,000, while their positive case suggests that the business could be worth roughly $2,500 per share. Therefore, I believe that the $1,400 per share is more attainable, but overall, I believe that these figures are rather overblown. She also, in my opinion, overestimates the value of Elon Musk's robo-taxis. Let's move on to the other businesses that Cathie Wood is placing significant wagers on. She is also working with Ginkgo Bioworks Holdings, ticker symbol DNA, on this project. In essence, Ginkgo Bioworks is a business that aims to program marketing in the same manner as we program computers. The company, which specializes in biosecurity along with software development, reported $81 million in sales for the first quarter of 2023. A 52% decrease from the $168 million they recorded for the same period the previous year. This explains why their stock has been declining. Ginkgo Bioworks is actually selling for about $1.33, making it a true penny stock, yet Cathie Wood is still acquiring more DNA shares. ARK Invest contributed to her ARK Innovation ETF and ARK Genomic Revolution ETF by purchasing roughly $5 million worth of Ginkgo Bioworks ticker symbol DNA. She added over 3 million shares of Ginkgo Bioworks to her ARK Innovation ETF and about 704,208 shares of this biotech firm to her ARK-G ETF. She is also investing in other businesses such as NVTA, where she increased her holdings in the ARK Innovation ETF by 300,807 shares and the ARK Genomic Revolution ETF by 80,287 shares. She additionally raised her holdings in Adoptive Biotechnologies ADPT and 110,000 shares in CareDx, which stands for cDNA. Now keep in mind that we need to consider Cathie Wood and ARK Invest's investment approach. She is attempting to acquire underperforming, innovative businesses now while they are still affordable, such as Ginkgo Bioworks, in the hopes that they will flourish in 10 years, much as she did with Tesla. There are so many outstanding businesses, including Twist, Bresper, Beam Therapeutics, as well as many others that feature cutting-edge technology. But if you want to reduce your overall risk, my recommendation would be to simply buy an ARK-G and ARK-K. There are other investment suggestions like VTI, so you benefit from excellent market-wide diversity. For those of you who enjoy dividends, you have SCHD, due to the fact that this form of ETF will be very advantageous to purchase if you want passive income during a recession or whenever the market crashes. The last step in our expansion strategy is to pinpoint some QQQM technology businesses. We should also take a look at a handful of Cathie Wood's own portfolio companies. One company that is particularly intriguing is Unity Software, which trades on the Nasdaq under the ticker symbol U. It is a significant player in the gaming business and trades for just $29.10 per unit, with their total engine being used by more than half of all video games worldwide. Unity is developing and wants to offer more complete software services and resources for their creators to create even better video games as the market for video games keeps on growing. However, they might truly pay back if you rely on certain of these organizations' long-term viability. Trimble is the other business that I consider to be highly innovative. Trimble is highly known for both its sophisticated analytics tools and positioning and navigational technology. Their customers in the transportation, construction, and agricultural industries can maximize their general efficiency thanks to their goods and services. The price-to-profits ratio is fairly high, reaching roughly 20, similar to Unity. The price-to-cash flow ratio, however, is similarly high, coming in at 27. The last stock is Bill.com, which trades for about $100 per share and has the ticker sign BILL. Bill is on our list because it provides software for accounting, tracking, and other financial tasks, including billing and payments. Over the past year, its revenue increased by more than 60%. This is where the business produced a very amazing $24 million in free cash flow. Despite the stock falling down 60% from its all-time highs, its ahead PE ratio was lowered in half to 64, which is still exceedingly high. This is the conclusion of this video. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching. We'll see you in the next video.